The financial news is not designed to make you wealthy. It is engineered to make you move your capital into someone else's hands. Every headline you have ever trusted, every breaking alert that made your stomach drop, every analyst who looked straight into the camera and said, "Buy now," that was not information. That was a transfer mechanism. And Solomon, the man who accumulated more documented treasure than any ruler in recorded history, warned you about this thousands of years before CNBC existed. Stay with this until the end. There is a prayer waiting for you, and you are going to need it. The operating table is cold. That is intentional. A surgeon does not warm the steel before making the incision. He cuts where it needs to be cut, and he cuts clean. So here is the incision. You have been investing blind, not because you lack intelligence, not because you failed to research, but because the information you were given was never meant to help you. It was handed to you at the precise moment it stopped being useful to the people who already acted on it. Think about the last time you made a financial move based on something you read or heard. A news report, a trending ticker, a friend who said his brother-in-law was already in. Picture that moment exactly. You felt urgency. You felt like you were finally one step ahead. And then, what happened? You acted. And weeks later, you watched the price move in the opposite direction as quietly and efficiently as water running downhill. That was not bad luck. That was the architecture of the system working perfectly. Here is the principle that almost no one teaches in plain language. Information has a life cycle. By the time it reaches retail investors, meaning you and virtually everyone you know, it has already passed through 3 or 4 layers of institutional hands. The fund managers read the pre-release manufacturing data. The insiders shifted their positions. The algorithms processed the sentiment shift. And then, finally, the headline was published. For you, dressed up as opportunity, delivered precisely when it served someone else's exit. Solomon understood this dynamic not in the language of Wall Street, but in the language of the human heart. In Proverbs chapter 14, verse 15, he wrote, and most people have never slowed down long enough to feel the full weight of this verse. The simple believes every word, but the prudent gives thought to his steps. Not most words, every word. Solomon was watching the credulous man of his generation consume whatever narrative was handed to him, and he identified it as the anatomy of financial ruin. The simple man is not stupid. He is simply unaware that the word handed to him was already spent. Stop trusting the speed of the information. Start questioning who benefits from you receiving it. The hot tip is not a gift. It is a handoff. Charlie Munger spent decades saying it differently, but saying the same thing. When something seems obvious to everyone, you are already too late. The transfer of capital from the impatient to the institutional is not a conspiracy. It does not require backroom meetings. It simply requires that most people act on feelings disguised as facts. Panic sells, excitement buys. And every time that cycle completes, money moves upward. From the many to the few. CAEs. Lewis once observed that the greatest trick the enemy of truth ever executed was making deception feel like common sense. He was not writing about markets, but he may as well have been. Here is what should shock you right now. You are not losing money because markets are volatile. You are losing money because you were designed, by the structure of modern financial media, to be last. And being last has a price. Right now, before we go deeper into the cure, we want to know something simple. Drop it in the comments. Where in the world are you watching from today? It genuinely matters to this community. Let us know, and then hold tightly. Because what Solomon built was not just a fortune. It was a method, and it is about to change how you read every headline for the rest of your life. Here is a number that should arrest your attention completely. The equivalent of $4 billion United States dollars in annual income. That is the most conservative scholarly estimate of Solomon's yearly revenue during the peak of his reign. Not his net worth, his annual intake. And he did not build that by reacting. He built it by investigating. 1 Kings chapter 10 verse 14 tells us that the weight of gold that came to Solomon in 1 year was 666 talents of gold. Gold was flowing to him from traders, from tribute, from commerce routes he designed. He did not chase the flow. He built the conditions for the flow to come to him. That distinction is the entire lesson. Now, most teachers would bring you to Proverbs chapter 25 verse 2 here, and they would read the famous line about kings searching out a matter. And that verse is real, and it is powerful. But Solomon also wrote something that receives almost no attention, and it is more surgical in its precision. Ecclesiastes chapter 9 verse 11. Read it slowly. I have seen something else under the sun. The race is not to the swift, or the battle to the strong. Nor does food come to the wise, or wealth to the brilliant, or favor to the learned. But time and chance happen to them all. Wait, did Solomon just undercut the entire concept of skill? No. He diagnosed something more dangerous than incompetence. He identified the investor who is brilliant but uninformed, fast but misaligned, educated but looking at the wrong data. The brilliant man who reads only headlines is still subject to time and chance, because he never investigated the deeper structure beneath the surface. Speed without depth is just an expensive mistake that arrives faster. Benjamin Graham understood this. His concept of intrinsic value was not a formula. It was a theology. He argued that every business has a real worth, a value embedded in its actual earnings, its assets, its management quality, its moat, and that Mr. Market, his famous allegory for the emotional crowd, offers you a price every single day that has almost nothing to do with that real worth. Some days, Mr. Market is euphoric and overprices everything. Some days, Mr. Market is terrified and gives things away. Graham's entire system was built on one discipline. Ignore Mr. Market's mood. Examine the underlying reality. Solomon would have recognized Mr. Market immediately. In Proverbs chapter 14 verse 8, he wrote, and this is the verse almost no devotional ever stops on, "The wisdom of the prudent is to give thought to their ways, but the folly of fools is deception." The fool is not just deceived by others. He deceives himself. He reads the headline, feels the certainty of the crowd, and calls that research. He mistakes volume for truth. If you are finding this wisdom landing in a real place, go ahead and tap the like button now. This is the kind of content the algorithm will only show to others if you tell it this matters. It costs you nothing, and it sends this to someone who needs it tonight. The balance sheet is not glamorous. The footnotes are not exciting. The annual report reads like a medical chart. But here is the thing about medical charts. They tell you what is actually wrong before the symptoms become visible. Solomon did not get rich reacting to what everyone else could see. He got rich reading what no one else was willing to examine. You need to know the land before you plant in it. That is not a metaphor. That was ancient agricultural law, and Solomon embedded it directly into his understanding of commerce and investment. In Proverbs chapter 27 verse 23, he commands, not suggests, commands, "Know well the condition of your flocks, and give attention to your herds." He was speaking to a farming civilization. But the principle transfers with surgical exactness. Before you commit capital, You must know the history of everything that is managing it. This means the partners, the founders, the people whose hands are actually on the controls. Most retail investors buy tickers. They do not buy businesses. And they certainly do not investigate the men and women running those businesses. Charlie Munger called this the Circle of Competence, and he was ruthless about it. He and Warren Buffett passed on entire industries, not because those industries were unprofitable, but because they fell outside the boundary of what they genuinely understood. Munger famously said that he and Buffett had a list of things they were too stupid to understand, and they honored that list. In a culture that rewards the appearance of universal confidence, two of the wealthiest investors in history built empires by admitting what they did not know. That is not humility as a personality trait. That is humility as a financial instrument. Now, here is where the wound goes deeper. Munger also observed that most people enter investments not because they have done serious analysis, but because a story made them feel something. A charismatic founder, a revolutionary product, a narrative of disruption. The story was compelling. The fundamentals were never opened. And stories, no matter how well told, do not pay dividends. Billy Graham once said something that has haunted me since I first read it. He wrote that the number one enemy of spiritual growth is not persecution or temptation. It is distraction. The constant noise that convinces a man he is moving when he is only spinning. The financial media operates on the same principle. It does not need you to make a bad decision. It only needs you to make a fast one. Speed is the mechanism. Noise is the fuel. Ecclesiastes chapter 5 verse 1 carries a warning that lands far outside the temple. Guard your steps when you go to the house of God. Go near to listen rather than to offer the sacrifice of fools who do not know that they do wrong. The principle, listen before you act, is as applicable to a partnership agreement as it is to worship. The fool sacrifices first and asks questions later. He enters a position because the moment felt spiritual, the opportunity felt divine, and the urgency felt real. Only afterward, when the capital is gone, does he begin to read the fine print, know the terrain, know the partners, sit inside your circle of competence and refuse to be moved by the noise outside it. That silence is not passivity, it is discipline. And discipline is what separates those who build legacies from those who fund them. Here is the hardest truth in this entire conversation. The best time to buy is when everything inside you is screaming not to. October of 1929. Newspapers declared the end of the American economy. Investors leapt from windows. Ordinary people emptied their bank accounts trying to stop the bleeding. And in the wreckage, a small number of men quietly began purchasing quality assets for pennies on the dollar. They were not fearless. Fear is physiological. You cannot simply turn it off. But they had trained themselves to read the panic itself as a signal. When the crowd runs in one direction with absolute certainty, the prepared investor stops and asks, "What is being abandoned right now? And what is it actually worth?" Sir John Templeton made a literal fortune from this principle. At the outbreak of the Second World War, when pessimism was not just financial but civilizational, when people genuinely believed Western society might not survive, Templeton borrowed money and purchased 100 shares in every single company on the New York Stock Exchange, trading below $1 per share. 104 companies. 34 of them were in bankruptcy. 4 years later, he had turned a small loan into a foundation of wealth that lasted the rest of his extraordinary life. He did not ignore the disaster. He measured it, and he concluded that the price of fear was greater than the actual cost of the underlying assets. Templeton called this the point of maximum pessimism, and he was clear that it was not a feeling or a guess. It was a discipline. He said, and these words carry Solomon's fingerprints all over them, "The time of maximum pessimism is the best time to buy." Solomon put it this way, in a verse that almost never appears in financial devotionals. Ecclesiastes chapter 11, verse 2. "Give a portion to 7, or even to 8, for you know not what disaster may come upon the land." This is not a verse about hedging as timidity. It is a verse about preparing your position before the disaster arrives, so that when everyone else is frozen, you are already positioned. The man who has diversified before the storm does not panic during it. He simply watches. And then he acts. The strategy of good abandonment, releasing a position not in panic but in wisdom, knowing when to exit before the exit becomes a stampede, is not a modern concept. It is what happens when a man has studied the terrain long enough to know what the terrain looks like right before it shifts. Most people exit at the bottom and enter at the peak. They do this not because they are unintelligent, but because they are listening to the wrong voice at the wrong volume. The financial media is loudest precisely when you should be quietest, and the market offers its greatest gifts precisely when the media has made it feel most dangerous to accept them. A.W. Tozer wrote something in The Pursuit of God that every investor alive should be required to read before opening a brokerage account. He said this, "The world is perishing for lack of the knowledge of God, and the church is famishing for want of His presence. The instant cure of most of our religious ills would be to enter the presence in spiritual experience." Tozer was diagnosing the soul, but the mechanism he named, the difference between noise and presence, between frantic information and grounded knowing, is precisely the mechanism that separates those who build enduring wealth from those who chase it endlessly and never hold it. The voice of God, Tozer argued, is not loud. It does not compete with the ticker tape. It does not shout over the breaking news alert. It speaks in the place of stillness that you have to choose, deliberately, to enter. And it is in that stillness that the wisest financial decisions of your life have been waiting. Solomon's final protocol, what we are calling the 48-hour rule, is not complicated. It is simply this. Quarantine every major financial decision for 48 hours after you first encounter the triggering information. Whatever made you feel urgency, whatever headline lit up the instinct to act immediately, that urgency itself is the warning. Sit with it for 2 full days. Investigate. Pray. Read the primary source documents. Ask the questions no one in the room wants to ask. And then, only then, decide. Proverbs chapter 21 verse 5 says it with devastating economy. "The plans of the diligent lead surely to abundance, but everyone who is hasty comes only to poverty." Haste is not ambition. Haste is the mechanism through which capital leaves your hands and enters someone else's. The diligent man is not slow. He is deliberate. And deliberateness, applied consistently over years, compounds into something the hasty man will never understand. If this wisdom has stirred something real in you today, consider subscribing to this channel. The next conversation is already being prepared, and it is going to go deeper. Now, before we close your eyes if you can, or align your thoughts with mine now. Father, we come before you not with demands, but with open hands. We confess that we have moved too quickly, that we have listened to voices louder than yours, that we have let urgency masquerade as opportunity and called our fear by the name of faith. Today, we ask for the kind of wisdom Solomon asked for, not clever strategy, not insider access, but the quiet, unshakable discernment that comes only from you. Guard our capital as an act of stewardship, not selfishness. Teach us to investigate before we act, to be still before we speak, to know the difference between the voice of the market and the voice of truth. And in every season, in abundance and in loss, let our first question be not, "What is the price?" but "What is the truth?" Protect what has been entrusted to us, multiply it for purposes beyond ourselves, and make us the kind of stewards who are found faithful. Amen. Go in peace. Invest with wisdom. And never again let a headline make a decision that belongs to your discernment.